Hello, my name is Qian Yi, the author of Beating the IRS Tax Squeeze, and I have been an enrolled agent for the past 20 years. The IRS usually starts its tax squeeze with a CP notice, usually a CP 2000 notice, which exempts your income tax reporting in a particular year. And you might consider it a correspondence tax audit. Imagine you are standing by your mailbox holding this thick letter from the IRS. You feel your blood is rushing to your head, and you notice that your fingers are tapping lightly on this thick envelope. And you wonder why. You wonder whether you might not be having a slight case of the jitters. You are upset. You can't help not to be upset, but don't be too upset. Take a deep breath. Just think. The worst can happen to you is that you might have to pay the IRS some more money, which you have been doing year after year anyway. Now go home, find a comfortable chair, sit down, and go over the letter carefully, page by page. The first page will inform you which year of your tax return has been exempt and the changes they propose to make. The second letter will let you know how much you owe them. The third and fourth pages explain why they have made the changes. And the fifth, sixth pages list the tax regulations based on which they have made the changes. And the seventh and eighth pages will tell you how you should pay, whether to get a third party to represent you or whether to call or to write to them. The ninth page allows you make payments by installments. Fancy that. The 10th page, the last page, is left blank on purpose. Don't ask me why. Aside from the above 10 pages, there will be 6 additional enclosures. 1 to other pages with calculations of the interest and penalties you owe them up to the date of the notice. 2, an envelope for you to reply. 3, notice 1212 with a list of numbers on IRS's automated telephone service. 4, notice 1219B on potential third-party contact. 5, notice 609, the Privacy Act notice. And finally, 6, the IRS Publication 1, Your Rights as a Taxpayer, which is only 2 pages, and it would be to your advantage to read it. Overwhelmed by all this intimidating information? Please don't be. Just check all the IRS proposed numbers carefully against the numbers on your Schedule B and Schedule D of your tax return of that year. You might have lumped together several subtotals into a final total. You might have broken down a big total into several subtotals. You might have reported a dividend or interest on another schedule, or you might have reported it already in the previous year, or you might intend to report it the following year. The rule of the thumb to report your interest and dividend is to report them according to the 1099 forms you received from your banks and investment companies, because the IRS has received an identical set. One thing might help you here is that whenever you report a big total, list the subtotals in a parenthesis next to it. After carefully checking over your numbers, and you might want to do a recalculation of your taxable income for that year. If you should find that indeed you pay less tax that year than you should have, by all means, pay the difference or pay whatever IRS proposes you to pay, and hopefully your case will be brought to a close at that point. But if you should find that you paid more tax than you should have, does that ever happen? It happens more often than you think. But wait for the IRS reply before you go ahead file the 1040X form for refund. Good luck, and please watch my next video on CP11 notice, or go to my website www.qianebooks.com. See you later.